Everything is fine. Okay,
I always come.
all right. Good afternoon, everybody. We're gonna proceed. I'm gonna proceed to share my screen. Right. Please let me know if you can see. It's okay. And from 1 to 10, how good can you hear me? You hear me okay? Okay. 7 or so. Okay, let me see. All right. Then I'm gonna try to speak a little bit louder, but I think you can hear me better or good enough at least to understand everything I'm saying. So that is the important thing. Right. So let's start. First, I would like to start with reviewing today's price action a little bit with you. I'm gonna go loud and clear. Perfect, Ricardo. Thank you. Um, I'm gonna go over the live commentary that we did today. And today, as you can see, we had a rather choppy morning, very manipulated and back and forth price action during the first hour or so. And this is normal because this week we have on Wednesday we have FOMC, right? So you can expect this type of price action during Monday, during Tuesday, and during Wednesday, all the way until after news. So I'm expecting Wednesday to be a little bit better after the 2:30 p.m. news release. Okay. So this is the economic calendar. You can see this on the economic calendar channel that is on the Discord. So you can see Monday we have news during the pre-market. Then Tuesday we have nothing. Be careful here. And Wednesday we're gonna have high resistance or nothing I would trust with my money until after 2:30 p.m. Okay, so this is for you to be mindful for the coming days. This is the same approach we take when it's non-farm payroll. This is the same approach we take when it's CPI week. So we take the same approach. And today, we treated it the same. So please be careful until Wednesday after FOMC press conference at 2:30. And then Thursday and Friday should be a little bit better. So this is hard conditions for a beginner, okay? This is for the experienced traders. And you have to be very nimble with your entries, with your stop losses, with your take profits, and all of that business. So the first thing that I didn't like was, let me get to the business already. To the last commentary, I told you guys that the opening range gap was too small, right? So this is the opening range gap. We close here on Friday, range settlement. We open here today, okay? So the gap is around 41.25 handles, and that is also why we had this price action back and forth, back and forth. Remember, the easiest way to spot a high resistance liquidity run is when you see the bodies overlapping the previous bodies. So this body is overlapping this one, and then the next body is overlapping the previous one, and the wicks and the bodies are just like creating a little range. And it is moving, okay? It is moving up and down. It is moving to the targets I gave you this morning. First of all, I gave you this one right here, which is Wednesday's high, okay? Bam. And then I said 830 lows, okay? Which is the news lows. And as you can see, we go there and we go to the 830 lows, and then we go to the next target I gave you, which was my best case scenario for today on NQ. I told you this at 9:40 something, 9:30, I guess, is here. Okay, 9:42. So 9:42, you had this target, and the rest, when Thursday highs and news lows, you already knew before the opening range was developed. So what you have to be very mindful and paying attention on days like this is, do we have FOMC during the week? Okay, so that is a red flag. If you're a beginner, don't trade. Just study price action. Then the second thing is the opening range gap. Is the opening range gap big enough? No, it is not. It is less than 50 handles. You have to be very nimble and be very cautious with this. Okay, not like this Friday last week. You can see we had 147, and we had a very nice, a little bit more trending, less choppy day. And today was more back and forth during the first hours, and then it got loose after a while to the next level I've marked. So the first thing, let's go back to the logic. So Thursday's highs, Wednesday highs, I'm sorry. Those of you who were my students from the last week and weeks before, you already knew this level. Okay, I made this level public to you. This one right here, the 19,790. You already knew that this was a likelihood. And as you can see, this Wednesday that was CPI, I believe, or another. Let me make sure which one it was. Because I want to be sure the things I'm saying. It was CPI. Yes, I'm right. CPI. So we fell short of this level for 5 ticks or one handle and 1/4, right? So this is still something of my interest, and it was still something of my interest until today, right? We tried to get it on Friday, couldn't do it. So today, during the London session, I took a long right here because that was pending business. And if you pay attention to the live commentary, I always want to tell you pending business when it is a price that is on my interest and that I think we're going to take sooner or later. So that's why the name is pretty obvious, right? Pending business. It's just pending. We're going to take care of that later. We didn't do so on Wednesday, not on Thursday, not on Friday. So today it was finally the day. Took a long right here on NQ. This is NQ, okay? So we have, and we're gonna teach more about this, but this is like a little heads up for the things you're gonna see today. So we have a order block here. My trade is right here at 445 as we enter into the order block. Here, it does one trade lower to the 50% of the order block right here, respecting the mean treasure. And then we span for the rest of the day, for the rest of the morning. And at 8:30, we displace higher towards previous day highs here, Friday highs. And then finally, later in the day, during market open, well, I closed one here at previous day high, a little bit late because I was managing many things. And then the second contract I closed it here as we traded to the pending business, right? To the Wednesday's highs. And it was enough for me. I could have put this just to break even and just wait for this level, but it's not necessary, right? This is not necessary. The best case scenario is never necessary for you to make money. If you take this trade from here to here, this is enough. Even if it doesn't take previous day high, it is enough. Okay, is 7 handles, 100 handles towards previous day high is 130 handles around that, and it should be more than enough for business, at least to complete business day. And then on ES, I took the second. Oh, this is the other trade that I showed you guys last week, right? And today, this will be the last trade of today on ES. So I wasn't able to take this run on NQ, but I was able to take it on ES. Okay. So the thing is, I want to teach you today the importance of the principles of the algorithm delivery. So far, do you have any questions about the executions, about the trades? It's gonna make more sense to you as we advance forward in the class. No? Perfect. Alrighty. So let me find a place. So this is place delivery. Okay? We're gonna place delivery, and we're gonna talk about power of three. I saw some of you guys already discussing about this on the Dojo channel, which is very good. But we wanna delve deeper inside of this. So the delivery of price is composed or formed by four stages. Okay? People who are more familiar with ICT concepts already know this, but for those who aren't, this is going to be very important and the foundation for your future in trading, placement, and reversal. Okay, so this only has four stages, and this is the only thing that price is doing, the only thing that price will do, and the only thing you have to identify when we're trading. Right? So every single run in price starts always with consolidation. Okay, this is the first one, and in my opinion, the most important one. Yes, you asked this today. Yes, indeed, Gorlak. Let me see, the recording is fine. Yes. So every single price run starts with a consolidation because the consolidation serves us for many things. So the consolidation is the origin of a price. Okay, this is the first thing. The second thing is it serves to engineer liquidity on both sides of the market. Okay, it shows when a move is near. And for a move, I mean a expansion. A move expansion is near. All right. Okay, I think you can see that very clearly. So this is what the consolidation is for. And the schematic of this will look something like this. Okay, so this is the first stage. So what is going on here in this little fractal of the price action is that the market is being allowed to spend time inside of a range for the purpose of creating or engineering liquidity on both sides of the marketplace, right? So we have these equal highs here, or the high of the range. This part is going to have buy side liquidity. And what is below the consolidation, what is below this range that price has been creating for a long time, is going to be sell side liquidity. Okay. So this is pretty basic for those of you who already know or are familiar with ICT concepts. However, you have to really understand this, and you have to be able to see this in the market and know the times of the delivery price when it's going to be a consolidation, because this will help you to not get chopped up, right? You're not going to be caught in a consolidation because you will know at what times this will form. So you can wait for this to finish or to be about to finish, and then you can enter. So, what is important in the consolidation? What side of the consolidation is the most important one? Somebody know? Just pay attention. No? Right? To the equilibrium of the consolidation. Okay? If you want to take a screenshot of this, you're welcome to do so for your annotations. So we always want to measure the 50% of a consolidation. Okay? Because most of the times you will have a model here. You can use this for your entry. You can use this for the basis of any other kind of approach you have to trading. You can use this first logic. This will be more than enough for you. You can harvest an income with this. You can harvest an understanding of price action with this. You can have a bias with this. You can use this for almost everything because this is the first pillar, the first column, the basis of the price action delivery. So most of the times you will see that when we have a range, okay, we have this consolidation, we have already engineered buy side liquidity above the range and sell side liquidity below the range. What you're gonna see happens is that we're gonna be reacting of the 50% or equilibrium of the consolidation. And you can start harvesting models from this. For example, let me show you something like this. Okay, right. This is an example of a consolidation. You have the market here on a range, right? You can see that it's spending time and all the bodies are encapsulated in this little range. And you can see the 50% of this box or the 50% of this range right here. And when the time is right, okay, when we finally leave an inefficiency, okay, after value gap, near where, near or at the 50% of the range, this is when you can expect your next um, algorithmic principle of the price delivery, which is expansion, right? A consolidation is always going to be followed by expansion, and we're going to talk about this later. But this is basically why you can use consolidation as a model or as a model entry for your logic or your trades. So the 50% is the most important point of a consolidation. You have your low, you have your high. We have engineer sentiment on both sides. What we normally do is we just wait for a signature in price action that can signal us that it is getting ready to move. And sometimes, in most of the cases, okay, it depends on your PDL rate. That's why I send you the homework. Some of you would choose the breaker, okay? Some of you would choose the volume imbalance. Some of you will choose another block. And most of you actually will choose the fair value gap because it's the most visual, it's the most easy to spot, easy to see. As you can see in this example, you have the fair value gap here at the 50% of the range. Price returns into this fair value gap. It's a bearish fair value gap. Unclosed candle here. This will be your entry. Your stop loss will be above the fair value gap. And your first partial or your take profit can be at the low end of the consolidation. And then the rest will be previous day low because we always target previous day highs and previous day lows. This is a must, okay? Most of the time, the algorithm will refer back to previous day highs and previous day lows. So if you see a model or if you see an entry that can allow you some space to target previous day lows or previous day highs from the consolidation, because this is the beginning of the move, okay? So that is a very good target for you to aim at. Okay, this is the first one, consolidation. And we want to see how does it look like in the chart. All right, I already showed you a little schematic, an example, but on today's price action, I can also share with you an example of this. So normally, this is the most important part because you will be noting down the times, okay, when to expect the consolidation. And normally this happens after hours, right? Overnight. When the market is closed, when we have the less injection of volatility, when we are predisposed to see choppy, rangy, little moves during the price action, this is when you can spot your consolidations, and it normally starts during Asia, right? So you have here the 6 p.m., and you have 8 p.m., and to me, this starts the Asia session, the 8 p.m. You have this until midnight open, and then you see the London open on the London Kilson at 2 a.m. in the morning, and until 5 a.m. in the morning. So from here to here will be your Asian session. I know some of you like to trade this, but you should not be trading this on a Sunday because there's no um, algorithmic principle on this little price action on the Sunday. You can do this any other day, but not on a Sunday. Then you have London. And for those of you who read the dojo or conversations, remember what Digi said. He said, Mr. Witness, how profitable is the model of London that takes one side of Asia and delivers to the other side of Asia? And I told him, that is, or that was my first profitable model. And it's super simple. It is super easy and it happens once, twice, sometimes 3 times a week. And it is everything you're gonna need. Okay. You don't need anything more than this to start making money in the market. But the thing here is that the trader feels like he wants to do more than enough. That is the problem because it stops being on your hands and it just goes to your head and your psychology fucks you up. So it is you the one who is messing yourself up, not the markets, not the model, because this works. And we literally talk about this on Friday, or it was yesterday. It was yesterday night before this happened, right? Is that the 2022 model liquidity simulation? Okay, yeah, that's what he said it, or that's how he called it. But you can say it is a 22 model, right? Because here it goes. So this is Asia, right? We consolidate during this time. We take Asian So it's high liquidity here, right? During the London Kilson, and let me go a little bit lower to the 1 minute, right? All of this, the range. We take this low, we're in London Kilson, and now we wait for a displacement with force and energy. And we have that here. You have a string high that takes these lows right here. You see how these lows are close to each other? So this is minor liquidity. We have a energetic force, energetic move that take these lows, which is also the lows of the Asian session right here. We have a displacement to the upside, breaking this swing high. This swing high is the most important because this swing high was the high that took the lows. So that is the high that rated these lows. Okay, these lows were rated from this price level. When this high is breaking through, now we have our 2022 model. Okay? And as you can see, this is very wiki still, back and forth, but the logic is here, right? So you have, remember what I told you guys on the last week class, you want to start annotating your PDR rates from the lowest rejection block. Okay? You have your volume imbalance here. You have an inversion for value gap here, like so. And then you have another one here, but I'm going to use this bullish one because I have already annotated one inversion. So I want to now use this one right here. Okay. So for those of you who were in the first week class, and I told you that you want to see an immediate reaction or a start of the move as we reach the rejection block. Okay, because remember you could have entered here, right? On this by setting balance to set inefficiency. You could have entered here on this volume imbalance. Okay, and you would have been in a little bit of drawdown from here to here. It's about 15 handles. You could have entered on this order block. Okay, so all of these entries are valid as long as they are, this is just in handles. I think this is the best one. All of these entries are valid as long as you are below the 50%. So this is the 50% of this expansion to the upside. You want to be entering below this 50%. So the first PDR you have here is this order block, this one right here, and the inversion for value gap, volume imbalance, and finally the rejection block. So if you remember, and if you were taking notes on the first class, you're gonna see all of these PDRAs respected after we touch the rejection block. So you see how they respect all of this on the way down? No respect at all. When we finally touch the rejection block, then we start respecting the volume imbalance, the inversion for value gap, the order block opening price, and then the bicycle balances are inefficiency, and then we are allowed to move higher. So this is the one of the first models I've encountered profitability with, and it's super simple. You wait for a rate of liquidity of Asia, one side, aiming to the other. You don't actually need a bias for this one, okay? How you locate rejection blocks? See the rejection blocks. I think the rejection block is this one right here, not the green dot. So it's the lowest body of the candle that takes the liquidity. Okay, so this is the candle that takes the liquidity, 318. So the body closes here. So you want to be mindful of this price, the body of this candle. So you extend it to the right and you expect a reaction from this later on. Not here because the market structure wasn't done yet. After you make the market structure shift, that's when you expect the reaction on the rejection block. As you can see, beautiful reaction. The bodies were closing above the volume imbalance, and then it was just accumulating lumps at this inversion fair value gap. So this is one of the models you can backtest, but the logic of the power of three comes here. Okay, you ready? Take your notes. All right, 2 5 a.m. in the morning, right here, from 8 p.m. night, right there. So this is our consolidation. Okay, so inside of our consolidation, we had a little bit of manipulation, right? Well, we're not going to touch on that yet. This class has to be just focused on the first stages because I need you to really understand every single part of this so you can continue with good basis forward, right? So as you can see, you can even consider this, okay? I have nothing wrong with you considering this as part of your consolidation, but to refine this further, you want to encapsulate the bodies, okay? Because the bodies are telling you the narrative and the wicks are doing the damage. So here we have our range during the overnight session from Sunday to Monday and then the displacement. So this is the 50% of the consolidation. Okay, you can see the line pretty neat. I'm gonna change the color to red, make it more visible, like so. We have the high of our consolidation. We have our low of the consolidation. And if you are paying enough attention to NQ sister, you're gonna see something funny here, something really funny. This low, okay, at 710 was taken here at 320. What time? London, Houston. Here on NQ, it was not taken. Hmm. This is the first hint, okay? This is what you should know as an SMT. It's an SMT divergence, and we're going to talk about that later. All your attention is going to be in consolidation for this class. And as you can see, when we reach the time that we expect a move, what time is that? London Houston. We have an SMT here at the lows of the consolidation. Then we have an expansion above the equilibrium, the 50% of the consolidation. What do we have here? At or near the equilibrium. Remember the example I showed you earlier? We have a fair value. This is a inversion fair value gap, which means it was a bearish fair value gap that later on got disrespected, closed above it, and now it is a bullish fair value gap like this. Make it bold. I'm gonna make this a little bit like that. Beautiful. And what is this candle doing? This candle is closing above the fair value gap, which was bearish fair value gap, and at the same time, it's closing above the consolidation equilibrium, right? So this one is killing two birds with only one stone. It's inverting this bearish fair value gap and it's closing above the equilibrium of the consolidation. Then what do we have? We have a retrace back into the inversion fair value gap once, twice, and the final time here, and then we start to rally. So where did I tell you that the moves start from a consolidation? Around the equilibrium, right? So you can see prices accumulating here after showing you an inversion fair value gap and showing you at the respect of the 50% at a time that you expect a movement, which is London Kilson. Okay, so let me mark London Kilson one more time, 3 to 5. So that is why I always consider time above price, because you can know this way when to enter a trade. So you have your consolidation, just to recapitulate. You know what times the price is going to be consolidating. I already told you that. You know at what time the price is more likely to expand. I didn't touch deep enough in that, but we're going to talk about that in the next classes. And now we have an SMT here. We close above the equilibrium of the consolidation. Okay, that was a requisite. We accumulate around the 50% of the consolidation. You can also see this as a breaker. I don't have any problems with it. You can find any P array you want here, but it's a respecting the breaker. That's why for the homework, I always ask you to pick a P array, because you can find pretty much most of them here. And then what you have is another order block here. So you want to see how we treat this order block. So you plot the 50% here. Okay, so you can see a little bit of back and forth here. The body opens right at above the equilibrium of the order block. We expand higher. We leave another order block here. We retrace back into this order block opening price. We reach to close of in threshold of the order block. We continue higher. And here ends the kill zone. So I enter before we ended the kill zone right here on this order block opening price. A little bit low below that, it was fine. What do you see here? This is the bottom imbalance. So my entry is at the low end of the bottom imbalance. Okay, the price is the same. 6, well, plus one tick, 611.50. My entry is at 611.75 for the spread. You don't have much spread on futures like on Forex, but still, you always try to not be or demand that precision. It is good enough. Then you have a little bit more retracement, and then you finally have the next stage of the price delivery based on power of three. Okay, so this was the logic on which I based my trade today on the Nasdaq. And as you can see, it paid off pretty well, right? So what is the importance of the consolidation? Let's go over this one more time. I think I put it here. There it is. The consolidation is the origin of a price run. So you want to identify the correct consolidation, because that would teach you and that will show you when a run is about to happen. Okay, it serves to engineer liquidity on both sides of the marketplace. As you could see on Nasdaq, on the example of Nasdaq, we were just chopping up and down like this little schematic figure. And on ES, we took one side. We didn't do that on Nasdaq. We remained inside of the consolidation. So that means Nasdaq was going to be the leader to the upside, because it failed to make a lower low. Just a little spoiler for the next classes. And then it shows us when a movie or expansion is near, right? So this is the next stage of the price delivery, the algorithmic price delivery, which is right here. We're going to touch about this later. Now we're focusing on this one. And we always pay attention to the equilibrium of the consolidation. So in today's example, it is fresh. Today's example, not last week's example, not last month's example. It is today's example. It happens every single day. We closed above the equilibrium. We came back to equilibrium, respected it, and then we had our expansion, right? Questions, doubts, Do you see the logic? Do you have any concerns about this first stage? I'm gonna send you a screenshot of this because just in case you're not taking notes. Here you can see in the chat. I don't think this one and this one. This is example. And now I'm gonna show you the real market example with executions right here. So pay attention to your chats. All right. Let me take bam. Okay. Homework, ladies and gentlemen, before I let my super friend and colleague Angel speak and show off his traits to us because he likes to show off his super sniper entries and he's very good at that. So I have to give it to him. The homework is gonna be you have to plot a consolidation and find the equilibrium and frame a trade off of that. You don't have to take the trade. Okay, don't take the trade. You just have to back test the trade. Okay. So in other words, you'll be doing something like this. Okay. You can see my executions here. Okay, they're not Photoshop, they're not fake. You can see the executions, but I don't want you to show me your executions. I want you to do something like this. I want you to put where your entry would have been like this, where your stop would have been, where your take profit would have been, something like this. Okay. You want to mark the time of your entry. Let's say it was 5 a.m. You want to put something like this 5 a.m. entry. Then you're going to paste up here the economic calendar, and it will look something like this. Okay, you have to do this. This is the part where most of you get bored, but this is the part that is going to help you to get whatever you want to get, whatever you want to achieve. You have to put in the work, right? So this is the consolidation. So I'm gonna name this consolidation. You have to make it pretty, okay? You have to like this. You have to enjoy doing this. So this is consolidation. This little box here, you can see this. This is the 50%, super clear here. This is the London Kilson, okay? You can have this or not. It's up to you. I'm gonna delete it. And then you have to show on your back test, okay, not execution. You have to show a PD array. In this case, I'm using the inversion for value gap, okay? I could use the other block, doesn't matter. I'm gonna delete the other block here. Here, I'm gonna say I use these right here. So my time will be 4:14, 4:14 a.m. entry right here. This candle, as it traded below the equilibrium, remember, at or around, but it has to be at or below to be better. Like the other example we saw today, when you wanna enter below 50%. So I will be entering at the inversion for value gap. My take profit will be up here. Okay, I know it could come all the way up here, previously high, but I'm gonna say that my take profit is only here because I don't need the best case scenario to make money. Okay, it will be something like this. You can make it more clearer if you want, something like so. And this will be the homework of today. It doesn't matter if it's um, Asia or London. You can find this also on the AM session, on the PM session, lunch. It doesn't matter, okay? This repeats all over along the day, right? So that is your homework. You should post your homework here in the channel. Pick a PD array. It can be anyone you like. And if you have any questions or doubts, you can ask me in Dojo. But let's give it up for Angel. Let's see if he's awake. I think he's sleeping. Any doubts in the meantime? Well, he fixes his Wi-Fi because his Wi-Fi sucks, as you know. He has the best snipes, the best computer, the best software, and the worst Wi-Fi. Ya, te toca. Ya me voy casi 50
So,
minutos, guacho.
sí, ya te iba a escribir para pararte ya.
Así me dicen todas.
So I think my Wi-Fi works. To be honest, I hope my Wi-Fi works. So let me share my screen. I'm gonna share you the trade for today. So there's my screen, right? So the first trade was mm, here. Yeah. So the first trade. Wait, I see. ¿Puedes ver, verdad? No.
Sí, sí, sí se
You,
ve.
you guys can see my chart. Sí se ve. All right. So the first trade was at 9:30 a.m. So like every day, we go for 1 hour time frame. And in 1 hour time frame, what I have here, I have an FBG. And this FBG is above a week. So when we have an FBG above a week, we can have a change of structure, a reversal, or something. So inside the the FBG in 15 minutes. No, I think it's in 5 minutes.
Ay, ay.
5 minutes.
Sí, nena.
I have.
Ya les di la clase.
Se, se ve.
Estaba un poquillo nerviosín, pero lo hice bien.
Oh, igual allá hice.
Presently having a thunderstorm, and I don't want to have this running too much.
I'm back. I'm back. I'm back. Here. Yeah, it's better. So inside the FBG from 1 hour, we have a breaker block right here. I just used the body for the breaker block. So in 5 minutes time frame, I'm waiting. Oh, in 5 minutes time frame, I'm waiting for a structure right here, for nothing close above for the breaker block. So from 5 minutes, I go from 15 seconds time frame. Mi internet. Hmm. Best PC, worst Wi-Fi. Here. No se ve nada. Rip. Best Wi-Fi out there. No. I think yeah, it's here. It's here. I don't know what happened. Ah, well, so in 15 seconds. No, you see my chat or no? Yeah, it's here. It's here. It's here. It's here. It's here. Yeah. So in 15 seconds, we try to find a change of structure inside the breaker block. So first, I always use gang box. So here above the 0.5%, and at the same time here in the breaker block, you have to take an entry. Where is it? Above the 0.5%. So when the market go up above for this breaker block, I'm gonna wait for something below I mean inside here. So when the market give a low, a high, a low, a high, a low, a high, a low, a high, and the new low, this low, my entry have to be in this breaker block. I mean in this order block,
¿Qué pasó?
in this one,
Sí, sí, dame un ratito.
right here. Because this is my change of structure. So I put a limit order in the body in the 0.5% of the breaker block, just right here. Top loss above the breaker block, and the rest is history. Internet, mierda. I hate this Wi-Fi. You see, se puede ver. So here, my first take profit, I mean my take profit is below this line because we have a sweep here and this is an FBG. And I'm waiting for a change of structure for buys. So that's why I put my take profit right here. The market go for take profit and start dancing a little bit. So I have an entry right here or here I think is close to my take profit take me on break even. So I have one take profit, one break even, and then I take another trade right here. Right. So like Evan, first we have to try to find something in 1 hour. You always have to go from 1 hour to 15 seconds. If you try 15 seconds, if you don't try 15 seconds, you have to be from 1 hour to 5 minutes or 1 minute time frame. If you trade 1 minute or 5 minute time frame. So first, in 1 hour time frame, I have an EFBG right here. So that's what I'm looking for. I'm looking for this FBG respecting, and in 5 minutes, I have here a order block right here. So the market come back for the order block. This is my confirmation. So I'm gonna wait for an entry. When I see the market, let me go from 1 minute time frame. When I see the market leave this FPG in 5 minutes, I'm looking for something below this line, below this box. But the market don't come back again. Why did the market like the FBG that the FBG is supposed to be bigger or anything? Yeah, I take this FPG because we have some concepts with witness. You're gonna learn, of course, but this is not the all of EFBG. You don't take this. You take from this because this zone, this part of the EFBG is like fillet. Is not important. The most important part of the EFBG is this one. Yeah, you're gonna learn about that. Don't worry about it. So so we have my presentation right here. What I have below, I have the EFBG on 5 minutes time frame just right here. But this FBG is just in the middle of my structure. So I have to try to find something below on discount for buy. So I have an FBG right here, and at the same time, on 15 seconds, I think. Let me see. Best Wi-Fi.
Welcome back. Welcome back. It is your host, the ghost with the most. That's right.
So just right here, we have a sweep right here. That's why I take this entry right here. I mean, this one, because I'm waiting for a sweep, I'm respecting this FBG. So in the middle of the 5 minutes FBG, and from this FBG was my entry. So I enter here, the market respect my FBG. I didn't remove the break even, but I'm because I'm waiting for take this big wick or respect this big wick. That's why I don't the market don't take me out on break even. So the market come back like I told for this week because the market leave this week and I kept an eye in this week. So the market come back again, sweep the week and go for my take profit. You see the market. This is a trade for 1,000 ticks. So that's the trades for today. 2 trades. No, I mean 3 trades. 1 break even, 2 take profits. You have questions about the first trade or the third trade or no, or nothing? That's not a question.
Look at this. Come and learn from me.
I always come.
So you guys don't have questions about this? Can we repeat again? The first trade or the third trade? The third. So welcome to the first class. Both Miss First Trade. In Spanish now. No, they don't understand Spanish, so I'm gonna speak in English. So again, from the first trade, in 1 hour time frame, we have an FBG right here in 1 hour time frame, and this FBG is just above a week. So when we have an FBG above a week, we keep an A in this FBG because we can have an inversion right here. So inside the FBG, we have a breaker block right here, this box inside this box. So when the market come back, I waiting for respect for nothing close above this box. So from I trade only 15 seconds. I don't trade 1 minute. Sometimes I trade 1 minute. I not trade 5 minutes. I only trade 15 seconds, 5 seconds, or 1 minute. And that's why I take snipes because you have a change of structure in lower time frames. So that's why you can take snipes. So from 5 minutes, we go from 15 seconds time frame. So right here, oh, on 15 seconds, I'm waiting for this. I'm waiting for a structure, for something to go up, and then for a change of structure. Oh shit. Oh, sorry about that. For something like this. El diablazo. Something like that. A change of structure.
Sí, ya ve a
I have
alistarla y
the
ahorita
same
me
thing
meto.
right here. When I see the market going for something right here, this
No, es que
manipulation
llegamos tarde, ¿no?
above my breaker block, I'm waiting for a
Ya
new
mejor ni
low
voy
below this low.
allá.
So when the market
Llego tarde,
make
mejor
a
no
new
voy.
low, I'm gonna try to find an entry in this breaker block. This is my breaker block.
Una vuelta, te juro, nos bañamos. Una vuelta
This
nos
one right
bañamos, te
here.
juro ya. Bueno, entonces, no creo que te bañes. Hay que estar ya a
This
las 3 y
is the
media.
breaker block. But I don't use that of the breaker block. I don't use the wick. I just use
No me acerques,
use
¿sí?
I just use the body. So my entry above the 0.5%, always the
No me
body. No,
acerques,
no, not
porque ya
always.
perdí
That's
mi...
for me. You don't have to do like me.
Porque ya
It's all on
perdí
you. I
la
mean,
cita.
that's my way of trading, you know? If you want to do like me, you can do it. But no, no. And no. I don't get how that is breaker block. I don't see high to complete it. Because this is 15 seconds time frame, so it's like all in your interpretation. For me, this is a breaker block, but it's not the same for you. That's why you don't have to trade 15 seconds or 5 seconds because it's like the things is a little confused. So for me, this is a breaker block. The market don't close below this week. So, como que a OB. El order block es este. The order block is right here. The order block is this. So the market have to come. Tan, tan, tan. So the market closed below the order block. So this candle is my breaker block. Very suave. Yeah. Order block, whatever. The name is not important. I mean, this is important for me. Of close candle after the down mob is still there. Yeah. I mean, I'm bad with names, so that's not a problem. I mean, this is what I'm looking for. This is what I when where I have my eye. Up close candle got before down. So I put my order here. Stop loss above this high, and the rest is story. Give me a second.
Mociones en la jipeta.
Right
¿Qué carro
here,
dejaron?
I have a sweep, and we have an FBG right here. That's why I put
Mande, mande.
my take profit right
Sí,
here
ya vi.
because I'm waiting for a reversal from these highs. So, ¿cómo te llamas? Duel. You understand the first trade or not? No, duel. Yeah. So I continue with the second trade. So again, if you wanna trade like me, you don't have to do that. But if you wanna trade like me, always I'm looking first 1 hour, 4 hours, or daily candle. If you have any doubles, you can just keep showing up. You'll look at it. All right. So in 1 hour time frame, what I have here, I have an EFBG. So I'm looking for this EFBG get respected. Don't close below or don't go below. So the market, where is this? The market don't close below. Nothing. This is 15 seconds and the market don't close below. So that's what I'm looking for. At the same time, we have a order block, a breaker block, whatever you want. That's what I'm looking for. So the market get respected and I'm waiting for a structure. The classic structure, I mean the most basic structure is this, right? That's the most basic structure. But sometimes we can have something like this. This is an internal structure. So you have to, how I say, you have to understand, you have to see this structure. But you can do it only with practice, time on chart, and that. So in 5 minutes time frame, I have an FVG right here. So sorry about that. So in 5 minutes, I have an FVG right here, but I don't put an entry right here because my structure is from this low from to this high. So you have to try to find an entry on this cone, in this zone if you're looking for buys, or in this zone if you're looking for shorts. So in this zone, I have a sweep this week. This right here is a sweep. I'm looking for sweep this right here because on 1 minute time frame, I have a FVG right here. So when the market come back, I put an entry right here below this pointer, the 0.5%. The market take my entry. I'm looking for respect this FVG. The market respect this FVG and continue. Why I don't put break even? Because when I see the market, when I see the market sweep this candle, I have an A in this big week because when I have or we have big weeks, the market always come back for the week, for the 0.5%, or for sweep again this week. Always. That's why I don't put break even. I just wait. So the market respect what I'm looking for and go for take profit. This is my take profit. I'm still waiting for this. We have something right here, and probably tomorrow or maybe I don't know Wednesday or Thursday or Friday, the market is gonna be here. I kept an 80 right here, so yep. Big wigs act like FBGs, right? Yeah, big wigs act like FBGs or imbalances or what. The name is not important. The problem is something the market had to come back again. So you don't have more questions, Duil or Ricardo or Kak or the Duke. I can't say the name, sorry. Because the Duke don't say nothing. So mm, you don't have questions? The Duke? All clear. DVD bad DB. So if there is no questions, that's all for today. I know Witness give homework for you guys. So do the homework. Practice
The
is
market is open.
uh, uh, so with homework, with practice, how is the way of you going better? If you don't do homework, you don't gonna trade like me. Just kidding.
Okay, guys, I hope the
Uh,
class has served you of insights and understanding. And please do your homework. Any questions you might have, please ask in Dojo. Send your homework to the homework channel. And we'll be meeting each other tomorrow. Please take this slowly. Don't try to figure out everything on the same day. Little by little, step by step, and you get to wherever you want to get. Okay, discipline and rules. That's all you need. Have a beautiful day, guys. See you soon. See you soon. And I'm
have a
gonna upload
beautiful
the
guys.
video on YouTube also.
See you.
Woohoo!
I used to be a trader. Look at this. Come and learn from me. All you retail traders. And we laugh.